Hi and welcome to another daily recap. So this is day 81 and it's August 19th, 2024. So today to summarize it, I got a losing trade in all EU, GU and XAU and all of them were good losers actually. I was on the wrong, I was on the correct side of the market, but I had a tighter stop loss, so price just took my stop loss and went in my direction. So this happened in all the pairs. So I just explain, I just do the analysis, pre-session analysis, and what I did and what could have been done to improve, you know, my performance. But which will not, I will not implement those changes immediately. I'll need large sampling size to implement them. For now, I'll just make a note of that one. So starting off with EU. So EU, I took a trade during the London lull. So maybe that was a mistake I did. Then after during the post-session analysis, I realized that if I could have taken the trade during New York, it could have been a profit. So anyways, I don't know what the market is gonna do. So anyways, I just don't want to miss the trade. Just took it on the London lull because it was very high probability trade. That's why I took it on the London lull. Yeah, price went in my direction. It was high probability and price went in my direction. But unfortunately, I got stopped out. Sometimes it works, sometimes it doesn't. I took the trade during London lull just because it was high probability. So uh, yeah, the trade probability was technically it was high probability, but my intuition said it was a medium probability trade, and it is a good loser because I took the trade as per my technicals, right? So let's open the charts. Give me a second and let's open everything, and then I can do the analysis for you. Okay, let's do this one, and I'll just show you the position analysis. Okay, starting off with the daily. The daily actually took out the swing high, so actually the daily was swing bullish. I need to change this one. Uh, Zooming into the internal structure, what we see is a bullish internal order flow, and price the factor is also bullish. So what I expected is obviously the price to come down into the daily supply and then indicate the daily supply and then push up, wait for the daily demand and then push up till it reaches this daily supply. So this daily supply would decide whether the price would go down or flip this one and the price can go up. So this is the inflection point where the next a few weeks of the direction would be decided. So yeah, my bias is very clear. We'll be looking for longs till the price reaches the daily supply. So if I want to look for shorts, I can look for shorts till the price reaches the daily demand. But aggressive trades followed by aggressive risk management. Coming to the 4-hour time frame, the 4-hour swing is bullish. The internal is also bullish. So this is the strong internal low. The weak internal high is yet to be formed. Also here also the price is too much elongated. I can look for shorts looking for internal pullback, but there is no supply from which the price can react from. So the only way that the price can come down is through this daily demand, daily supply. So what I look is I look for minor pullbacks in H1 time frame, and then I can look for POIs to look for longs, and then I can look to trade longs. That's my idea, very simple. But once the price reaches the daily supply, I would be very cautious of taking longs and I will be looking for the H1 to chop bearish to take shorts because once a daily supply is reached, the shorts become high probability now. This is H1, swing structure is bullish, same. Uh, I was expecting the price, the phase A2 to continue. Uh, if the price taps into this is not a high probability POI, but still, it's a POI that can be respected with the current bullish momentum. So if this POI has been respected, then I can look for M15 LC2A models because it's a very aggressive trade. At least my entry model should be a conservative one. So I must look for M15 LC2A and then boom, take. Suppose if the price makes a bullish, I mean a bearish top, then I'll wait for the price to go up. to make a bullish chalk, and then I can look for longs. If the price did not make a bearish chalk, it's fine. Then I'll continue with the longs using M15 LC2A. And one more thing is that I will not immediately trade once the price reaches the daily supply, expecting the internal pullback to start, because this supply was formed long ago. It was formed on December 2023. So I don't know whether this supply is valid or not. So the only thing I can do is wait for the H1 to chalk bullish, sorry, chalk bearish before taking these shots. And once the H1 chalk bearish, I must be aware that it could be an internal pullback also. It doesn't chalk bearish doesn't mean the start of the swing pullback. It could also be an internal pullback. So aggressive entry followed by aggressive risk management. And at 7:45, the session started, and I was looking for the price to tap into this H1 PY to take longs. And I was also aware that there was another H1 PY below. So if this PY fails, obviously it means that this PY could be respected. Very simple. So I just noted down the conditions because when it's not, I know that I'm going to take the trade, so just analyze the trade. So price not reacting after my time frame PY. Yes, it's not reacting. Medium time frame chalk. Yeah, I mean, it's not medium time frame chalk. It's in line with the medium time frame order flow. So yeah, it is in line with the medium time frame order flow. Medium time frame PY with a score of at least 4 by 8. Yeah, you can see this is. I thought it was not a good PY, but once you have a checklist, you can see that it is a good PY. So it has swept liquidity. Swept liquidity, it has displacement. You can see some fair value gaps here, and it has made a shift in the order flow. Yeah, it is unmitigated. It is not mitigated. It does not have a pullback or lead, and it was not also formed during the kill zone, and it is not within the 4-hour PY. But it has flipped a supply. You can see it has flipped a supply. So 5 out of 8 conditions satisfied, which is okay for me to take the trade. And yeah, high time frame narrative is also supporting the medium time frame idea because we are expecting the price to go further up till the price reaches the daily supply. So what are the risk factors? Price can make a deeper internal pullback to tap into this POI. So I'm trading without a bullish sweep zone being formed. So what is a bullish sweep zone? Probably like a bullish sweep zone is price taking a sell side liquidity, then shifting the order flow to bullish, which means the price has took the sell side liquidity and then shifting the order flow. That gives me more confidence than just shifting in the order flow, because just shifting the order flow could be a fake move and then the price could reverse again. That's why I just wait for sweep zone to be formed and then take longs. But anyway, since this was a very high probability condition, so I just wanted to take this trade. And the entry method would be M15 LC2A or LC2B, because as I already told you, this is an aggressive trade. So my entry model should be a conservative one. So this is the aggressive entry and this is the conservative entry. So the thing here is that there was a lot of sell side liquidities in the M15. I spotted in the M15. So what this means is that price, if the price slides through this liquidity, then obviously it will slide and take out this, make an H1 chalk. This is what I was a little bit worried of. And yeah, session update 9:45. Price made a fake break and then took the sell side liquidity. How do you know it's a fake break? This is the start of the pullback. Price came down, pullback, came down, broke, fake break, and then induced the sell side liquidity. And it's also the sell side liquidity present. So both of them were taken. So anytime that the price can reverse and the PBL is still active. I kept the trade. The price mitigated SPY. So this fair value gap was also filled. So multiple confluences was striking. Fair value gap filled, liquidity swept, LC2A. So I just kept the trade here, gave it some stop loss buffer, and price tagged in. So zero emotion, full composition just for my motivation. And price took out my stop loss at 11:23. It was during London lull itself. This is what I mean increasing the trade during London lull. And so what is the next thing? Okay, after a loss, I must not immediately take real trades. I must wait for some more confluences. After taking the loss, what I did, Now I wait for the price to chalk bullish. This was the chalk bullish to take the longs. Otherwise, for phase C shorts, I must see a bearish IBOS. Bearish IBOS is changing. If this internal structure is gone, I can look for bearish IBOS to take shorts. But if suppose price reaches this daily supply and takes and makes and chalk bearish, then I would be happy to enter shorts, phase T shorts. So let me quickly show you the Euro USD chart. So this is the euro dollar chart. Actually, price went in my direction after taking my stop loss. If I jump into the M15 time frame, you can see here. Uh, yeah, this was actually the entry that I should have taken, but my entry was this was my entry. Yeah, this was my entry. I got stopped out. Gave it some stop loss buffer, but it didn't work. I got stopped out. But if I traded during the New York, this was the start of the New York session. At New York, the price already went up. The price already started to move up. So what I could do is I could look for, this was the candle, the liquidity candle probably. So what I could have done is I could have placed my order here, placed a sell limit, a buy limit order here. If the price tags me, fine. If the price doesn't tag me, it's also fine. One pip stop loss, boom. That's easy, right? So it is what it is. So, even when my stop loss could have been tighter, just 4 pip stop loss if I had placed in this level again. So it is what it is. It was a good trade actually, but you know, I just don't want to miss the move because uh, it was a high probability trade. So that's why I just entered aggressively. But yeah, there is an alternative way to enter. So let's also do the you know position analysis. So this is 4 hour chart after the position. Okay, this is slow start of the week obviously, but still more to go. So and this was the position at still the price was consolidating. The price went slightly in my direction again, pull back, so taking out those yearly buyer stop loss also. But the price still didn't make the chalk bearish, right? So that's why the H1 time frame is so powerful. So tomorrow I could have expected, I mean this day I could have expected, price to make phase C or go back and then start the phase D, anything. So that's a story for tomorrow. But for now, it's a losing trade. Hopefully tomorrow I get a good trades. Okay, guys, it's a random distribution, so I don't know when my strategy would play out when it doesn't. But the thing here is, am I taking good losers or good winners, or bad losers or bad winners? That's the kind. Even the bad winners are dangerous because it induces euphoria. Okay, so that's it from euro dollar. So let's jump into GU and see what GU got for me. So let's start the GU. And yeah, in GU also, as I already told you, it was a losing trade, and the loser came at New York. The position was short, and the face was face D. Yeah, EU and GU moves, parallelly. So while the EU was not able to go to the daily supply, GU was already in the daily supply and made chalk bearish. So it was in phase D, and revenue was, I just short of minus zero point 0.5 because I just reduced my stop loss when price reached a certain level because price went actually in my direction. It went almost up to 1.21 hour. So it was a high probability trade because it was high technically and high intuitively. Overall, it was a good loser. So let's jump into the charts and see what was my analysis and why I did lose the trade. So this is the daily chart, and yeah, this uh, as I already told you in previous I think day 75 to day 80, I don't remember. This was a low resistance liquidity, but price will definitely take out this, make a strong move upside, and yeah, it's now actually making that move. Uh, but I'm a good analyst, but I'm developing as a trader, so price did not come to my, I didn't take any trades during this leg. It's fine. So price is about to reach this daily supply. So once the price reaches this daily supply, I can expect a pullback to this daily demand before the price pushes up to take out this weak internal high. So probably my bias was bearish because price already tapped into this daily supply. So my bias was bearish. So I know it was against the weak, against the strong internal low, but still it's daily. And if I jump into H1, this would have been, I'll just tell you in H1. Okay, this is zoomed in version. It's same thing. Yeah. So this is the 4-hour structure. 4-hour is bullish. The swing structure is bullish. This is the weak swing high, and this is the internal structure. Internal structure is actually bullish. This is the okay, this high strong must be here. I think that will be in the next tab. Yeah, high strong. This is a strong internal low, and price is already tapped into the daily supply. So what I can look for is, price to continue to go bullish to tap into this 4-hour supply and then push down, or we can expect the price to chalk bearish in the H1 time frame so that we can look for the internal pullback in the 4-hour time frame. So this is H1. H1 is swing bullish. Internal is also bullish. It's too much elongated, so it's high time that the price can come down using daily supply as a catalyst. This is the low resistance liquidity. So initially, I didn't consider the daily supply because my daily supply will be visible to 4-hour and daily, and my 4-hour would be visible to 4-hour and H1. So I didn't mix up the daily and H1. So that's why there is no daily supply here. So initially, what was my plan is if the price reaches this 4-hour supply, I would take the shorts. 4-hour supply. I would look for chalk bearish, and then I would look to trade. So that was my initial plan. And for longs, with A2 longs, I would look for the price to sweep some sell liquidity push up so that I can simply to say I was looking for a bullish sweep zone to be formed. So once that bullish sweep zone is formed, I can look for longs up to this 4-hour PY. But before that, I would be looking for, but if the price taps into this 4-hour PY, I would be looking for shorts. This was pre-session. And yeah, there was this liquidity. I spotted this liquidity and I was waiting for this liquidity to be taken. And one more thing is if the price didn't sweep the liquidity, assume, and if the price respected this POI and it started to move up, then I would take shorts from here because the demand chain is holding. And yeah, price actually respected this POI. It pushed up and then it made a chalk because then I realized that okay, there is this daily supply. So price already tapped into this daily supply. So taking longs from this POI is totally invalid. So price made a chalk and this is the POI. So if price taps into this POI, look for some LC1 or something and then take shorts because it's a very high probability condition because H1 is stock bearish after tapping into the daily supply. So yeah, it is a very good criteria. And I think yeah, faced with the following conditions. Price tapping into the high time frame POI, higher time frame score with sort of 8. I'll show you in line with the medium time frame order flow. All the boxes are ticked, so it's a high probability condition for me. So these are the POI criteria which this daily supply satisfies. Okay, I think yeah. So what are the risk factors? The risk factor is high resistance for the price. Yeah, this path was high resistance for the price to travel, but nevertheless, I would be break even once the price reaches this liquidity level. High resistance for the price to travel. Thus, price may consolidate or even more, or even move up, respecting the fair value gaps and taking out my stops. And one more thing is price did not reach the 4-hour fair value gap. So only these were the risk factors. So, but it was a high probability trade as per my intuition because though this is a high resistance path, at least I was expecting the price to at least take this liquidity. So after taking that liquidity, I would be break even. That was my plan initially. And I got this was the M15 lid. So I didn't wait for this lid to be taken because this was the last POI of this M15 leg. If this POI fails, then the entire everything will be failed and the price can just go up. So this was the last POI. and price tap into this POI actually, and I just kept my trade right here. We just price can tap here, but I could place my trade here, but I felt safe to place it here because if the price wants to go rapidly up, all these low resistance liquidity, there will be no candle closure below. So placing sell stops was a safe option than placing sell limit orders. And price tapped into this POI, immediately tagged me in, and yeah, price went in my direction for some distance, but it was not the convincing way that I expected the price to move. But anyway, once the price made this leg, I took my stops to above this point. So I just reduced my, above this point. Actually, this should have been my stop loss, but I just gave it some extra buffer, so I just reduced that buffer. I think, yeah, post session. So, when I was doing my post session analysis, price actually didn't hit my stop loss. It was just revolving around. I was expecting, I was set my, you can see my alarm here. I was expecting the price to take this liquidity point before, uh, even if the price wants to go further up. Uh, okay, I know that this was a high probability trade technically and as well as intuitively. So I just waited for the trade to play out, but yeah, this is M15. Still, the price was you know, revolving around. Okay, if I jump into the charts and show you what was GBUSD doing. So yeah, it just came down. It didn't even take out the, this Asian low. It just made equal lows with those Asian lows, and then the price pushed up. This I don't know whether it was a news or something, but I don't. It pushed up rapidly. Thank God I didn't lose more than there was no slippage issue, and I just lost what I meant to lose. And I didn't expect this one. Every moment in the market is unique. So for me, the supply seemed to be in control, taking out the buy side liquidity. You can see the price for buy side liquidity and then push down. This is a clear sweep zone, but to come out of that sweep zone, you need a ton of money uh, infused in the market, and yeah, a ton of money came into the market, and then it pushed the price up. So it is what it is. So there is nothing to be worried of because every moment of the market is unique, and anytime big players would step in and push the price up or down. As a retail traders, I just stick to my strategy. Believe in my strategy. There's a random distribution. I mean, accept the random distribution of my winners and losers. Accept the winners, and also more importantly, I must accept the losers. So that's it from GU. So let's see what XAU got for me. So let's jump into XAU. I think it's going to a long video. Let's quickly finish off XAU so that I don't waste your time. Okay, in XAU also like we face A2, same. The XAU is all-time high, so there is no point in taking the phase D shorts. So phase A2 makes more sense than phase D shorts. So again, the I took the trade in New York and market face was A2, lost the trade, and it was a good loser. Technically, it was high probability as well as intuitively because there was no opposing supply, and the POIs as well as other conditions, told me that the price is going to go up. Yes, price went up. It took my stops, and then the price went up. So let's jump into the charts and see. So this was the daily and daily was the swing structure is bullish. So this is the supply which I expected the price to come down, tap into and then continue, or it can make a deeper pullback, tap into this supply or demand and then push up. Anything, but for now, since the price is bullish and in other euro dollar and GU dollar, when GU the price is also pushing up, which means the dollar is more, it's gaining value. So I expected the price to sorry, the dollar is losing its value. So I expected the price to, push up because EU compared to EU and GU, gold price is more than a dollar. So if in EU and GU there is an increase, there is a bullish order flow, which means the dollar is weakening in EU and GU. Definitely in XAU, the dollar, the chart will move up because gold prices more rapidly than EU and GU. So that's the key point here. And if I jump into the 4-hour time frame, the 4-hour swing structure is bullish, internal is also bullish. So if the price makes chalk bearish, then I will be looking for shorts using H1. Until then, I'll be looking for longs playing the phase A2, but I'm not expecting the price to come down here until and unless makes a chalk bearish. This is H1. H1 string structure is bullish, and the internal structure is also bullish. So we are having a beautiful POI which swept liquidity and which is also having inducement, Asian lowest inducement. So beautiful POI, but I'm not going to take LC1s here. The thing is, I plan to take LG2As because it's a very large range. So I just need some pullback inducement to confirm that this to give me more confidence for this trade. Remember, when you take aggressive trades, entry model should be conservative. When you are conservative in your analysis, entry model can be aggressive. That's your wish. So zooming in, this is a good POI. I've already told you it has Asian lows, and this POI is very good. So what I can expect is price to come down, take this liquidity, or form an LC2A somewhere here, take this liquidity, purge the liquidity, and then push up. It's very simple trading day. So phase A2, price not tracking off from the time frame POI, in line with the medium time frame order flow, higher time frame supporting the medium time frame idea, and medium time frame POI is 4 out of 8. So what is the criteria? It has swept liquidity, it has displacement, it has unmitigated, you can see still it's not yet mitigated, it has an inducement, yeah, it has an inducement technically, formed during the kill zone. Yeah, it was formed during the New York kill zone. So 6 out of 8 criteria are satisfied. So boom, it's a very high probability POI and high probability scenario. The only risk factor is this does not have a lid. So if there is no pullback inducement in M15, there is no trades. So that pullback inducement is called LC2A. So I just waited for that one. So yeah, price made a fake break. So this was the lid. So if this lid was taken, definitely I'd be looking for longs without any hesitation. So these were the M15 liquidity. So if this liquidity was also taken, additional confluence. Otherwise, no need for me for wait for those confluences. I'll just take longs, whether it is winner or loser. I'll be happy to lose during these situations. And yeah, price took the lid, and you can see the rejections coming off. So I knew that the demand is gaining control, so I just want to take the trade, and I took the trade. Yeah, one more risk factor when I analyzed the H1 chart is that uh, this was a fake break, but in H1 it seemed like as if this was bearish sweep zone. You can see price took this buy side liquidity and then push down. So this could be the POI which the price can respect and the price can push down. But if you see the overall perspective, the chalk was right here. This internal structure is also the chalk. You can see this overall trend. So price is moving within this range. So I can't consider this as a chalk. But anyway, in my view, it was looking like a chalk, but I didn't consider. I just took the longs. But I also add that the bullish perspective just to keep myself in check because after losing, I might not say that, oh, I didn't notice it. I noticed it, but I didn't consider it in my analysis because too much of analysis will result in paralysis. And yeah, immediately, this was, a kind of trade that I don't want to take in my life ever after. So this was my entry actually. This was my entry, and I gave a bit of stop loss. I mean, a bit of buffer, but that buffer was not enough for the price. Price tagged me in, tagged me out in just one candle. So I know it was, very terrifying. Like price didn't even move, a pip in my direction. He just swept my stop loss. Tagged in and tagged out immediately by the same candle. After this, what can I expect? I'll wait for the price to chalk bullish to take the phase A2 longs, or I can wait for the price to take out this strong internal high to play the phase C shorts. Those two are my aim. So obviously, I know that that won't happen today. So XAU is done for the day. So after this is the post-session analysis. So there's nothing today. We can expect the price to stick to this bearish order flow. Otherwise, we can also expect the price to take out this bearish, make out a bullish stock and then price to continue the bullish order flow. Yeah, I look to play the fixed A2 longs as the price was in all the time high and there was no supply to the left from which the price can reverse. Stopped out minus 0.5 hour. It was a high probability trade. and it was a good loser at the end. Looking forward for the price to make a bearish high boss, indicating a start of a swing pullback, or the price can continue making higher highs and higher lows. That is, the internal order flow can continue. So this is the M15. So I placed my trade here, gave it a bit of stop loss, got tagged in, tagged out instantly within a single candle. Instantly I got tagged out, but the trade idea was correct. Trade idea was correct. This M15 POI was respected, and the price moved in my direction actually. This is gold. So this POI actually got respected. If I draw this one, yeah, this POI actually got respected and price pushed up, giving me the my desired take profit. But yeah, I can't say anything about this one. There is no mistakes. Unlike EU, which I took during London lull, I took this during New York, but it failed me miserably. Okay, it is what it is. But analysis was correct. High probability trade, everything was correct. It may play out or it may not. It depends upon the random distribution. So let's see. Let's hope for the best and let's continue hustling. Thank you guys. That's it for today. So to summarize, all were good losers and all of them were, losing trades obviously, and all of them were good losers. So I trust my strategy and I'm not going to change or tweak anything. I just keep moving. I mean, moving and marching forward to increase the sample size and get the benefit of my strategy. Thank you guys. See you again tomorrow. Bye.